We'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. Hey, everybody. Happy Friday. Welcome back. We have some pretty tight price action this morning, up a little bit, down a little bit. Watching some key levels right around that 6,000 handle. We have some big gamma levels this morning, just stuck right around that 6,000 handle. Going out to, I mentioned this 5,900, 5,905 level. That is the big JP Morgan support zone that I do think price can get to by the end of the month, especially if you break this 5,960 low, which hasn't happened yet, but we'll obviously watching price, today and into next week. I do have a trade on this morning that's centered, looking to see if I can just pull a little bit more time decay. And this is the low from last Friday. Do we, hold? This is the gap fill. And so far we held it. I did want to take a look at a price play today on Qs or SPY. I talked about this in one of my earlier sessions. Look, on the weekly time frame, we have two pretty big indecision candles. So let's go. I mean, we don't see a lot of indecision without volatility quickly coming later. So example being just in this last little bit, like those two candles followed by big volatility. There's two candles here followed by big volatility, a couple of candles here followed by big volatility. Makes sense. So, I mean, this last like 1, 2, 3, 4, 5 weeks of price really hasn't done a lot. We haven't seen price do a whole lot in the market. That's okay. Like, we're not necessarily turning lower, despite all the potential concerns out there. The market just doesn't seem to care that much until price suggests that it does. So just watching my levels pretty closely this morning. But this is coming into the day. I thought 6,000 would be an interesting spot to show some resistance. And it could also just show like this big magnet for the day where it just holds right around that 6,000 handle. So we'll see. Currency strength wise, what happened overnight? So we had FOMC Wednesday, markets. It was just currencies and futures yesterday. Things are pretty quiet today. Euro on top, pound on top, dollar catching a little bit of a bid, Aussie dropping, Swiss, New Zealand, yen, CAD, all to the downside. So euro up a little bit, dollar up slightly, pound up slightly. We had the Bank of England hold rates this week. That was on Thursday. So Bank of England held rates at 4.25. Swiss National Bank cut rates to 0%. I do wonder if their next stop is maybe going into negative interest rates. I don't know if they would. I don't know if that's necessary. I think that was a pretty big extreme, post COVID. But you never know. You never know. Negative interest rates maybe. Bank of Japan still holding at 0.5%. News today. Pounded retail sales, CAD retail sales, low impact news, Philly Fed down slightly. Markets just don't seem to give a funyun. We're pretty sideways. So, all right, I want to price out something here on the Qs. So I'm just going to look at some levels. I think if we get to Qs, maybe get to highs around 541, that's $11, or get down to like 501. That's a lot. That's like $20 downside, maybe $10 upside. I'm curious if I can create an option trade that I'd like to play the next couple of weeks of. So let's see what this would cost. If I were to go to the July 18th expiration, Qs to the upside. If we're going to the upside, maybe a cheap trade to get up to 540. If I did like the 535 by 540, okay, it cost me 243 to make 257, or roughly 240 to make 260. Or think of it this way, it cost me $2.40 to make $5. Okay, so that's okay. To the downside, trading at 530. Do I think I'm going 5 wide there? Do I think like a 510? Maybe a 510 by 500? So for 393, I have a trade that potentially pays me $5 on the upside, or a trade that potentially pays me $10 on the downside. Let me see what this costs me if I go 5. Let's see here. Wow, that's a big jump. I was gonna say just go closer, like 10 bucks. So I pay 6 to make 10. 6 to make 10. 6 to make 10. Hmm. All right, let me price this trade out. So let's build this one out. I'll just throw it on the other screen first. This would be a inverse. Yep. So on SPY, let's go QQQ. Price this bad boy out. So if I bought the 60.35, expiration would be July 18th. 60.35 and 60.45. 510 put to the 500 put. Okay, let's see how nasty this one looks. So this would be the trade if I were to take it. There is a dead zone. Okay, there is a dead zone. So if price stays exactly where it is, there's a dead zone from around 540, which is the highs, to really 505, huh? I guess now that I see it that way, that dead zone's pretty big, because that means we'd have to get to we have to make a run of, I mean, this gap is like a 490 gap. So if we fill that gap, I mean, that trades pretty nice. But paying $6 to make 10, I mean, it's not quite a 1-to-1, which is kind of enough for me to say, like, that's not a good trade. Not a good trade. But I just kind of see us having limited upside. If anything, maybe melt up, test the highs, maybe look at a gap fill on just a bear put spread. I think I'm willing to kind of take that trade. So we'll see. But I'll keep an eye on it. Also had some more stocks pop up on my radar today for some setups. I'm going to add in and see if I have any new ones. Pepsi, I looked at AMCR, AMT, Toast, Dell, Schwab. FTNT is a new one. FTNT is a new one. COHR, I'm already in. OS, we priced out. CI, I think CI is a new one. ETR, ESI. ESI, AEP. Okay, some of these I've priced out. LAZ, is that Lazy Boy? Maybe. OPCH is new. GGG is new. Okay, there's a few new ones in here. All right, I'll take a little screenshot here and start getting some of these priced out. All right, let me check my sell trade this morning. Up around 20% on that daily profit play trade. Question is, are we going anywhere? So let me take this trade off the table. I think just to be safe, it's going to take a little tiny winner. Well, that turned quick. Was profit, now it's down. Come on, don't get too directional on me. What do we have? Rise in the day, I weekly gain. Really? Well, you're seeing that right here. This is where the week started. Right where my mouse is. This is the week starting. We are very close to turning this thing negative for the week if we don't hold around 59, 80 to 59.75. Take a look at levels again. There is some pretty big support around the 5,900 handle intraday if we are going to have a drop. But I'm curious if we end up getting stuck right around that 6,000 handle. All right, let's go a little top down, do some extra analysis. I'm just going to pull up a blank chart here. There we go. So just watching this area really carefully. I mean, are we going to break the structure, fall back down to some, correctional areas? Are we going to try to wait or try to pop to the upside? Something like this, like just a little hesitation, a little bit more of a push and a melt up, trying to get back to all-time highs. July is a pretty bullish month. Maybe we get through this next week with maybe a pullback, and then we start to bounce up into the end of the month, into July being another bullish month for the market. Gold ripping. Well, we'll see. We'll see what Carr's definition of ripping is. I wouldn't call that ripping. Gold's actually flat on the day, unless you're looking at a very small time frame. I said this on the some of the sessions this week. I mean, to me, this is a support line. I think we're bouncing off like the 21 moving averages. So if I go gold here, take a look. Is that blank? Yes. Let me just add in a couple of indicators here. So EMA, let me add a couple more EMAs in here. 1, 2, 3. So I have the 200. Let's go 21. And we'll go 50. And we will go 100. Turn this 200 into a 144. There. So gold seems to be just holding this 21 moving average. So, I mean, pretty precise, like hit the 21, bouncing up a little bit. That's such a tiny little move on the daily time frame, but intraday seems pretty decent. Tick wise, that's up a little bit. I mean, if you got 33.43 to 33.67, it's not bad. Up around 25 points or so. That can pay well. All right, holding that low, holding the gap fill. See if we get back to center, back around the 6,000. I think the 6,000 handle is just going to be a big one today. One trade I might look at right now, SPX, today's expiration, maybe just 6,000. 59.05, there. I mean, I risk $100 to make 400 if I'm in between these levels. So between 59.95, 60 or 66,005. If it's in there for the entire day, I can keep some credit. Now, if I take the trade early, I don't want to hold it to expiration. Then I try to pull this trade in for about $14 and some change credit. And if I see it trading for, 13.20, maybe 12.20, something like that. Not a bad trade. But intraday stuff can be a little tricky. All right, let's do a little bit more top down. So moving average, that's gold. I still think gold is going to be a bit of a grind. So if it grinds up to the highs, watch for that structure. Maybe gold heads lower. I still think a correction is due. I like to see the XAU spot price hit the 200 moving average, which I think that's the 144. Yep, I'll add one more exponential in here. So the 200. There. Make this one a little bit larger. Okay. So that's the moving average I think we get to before we end up making like significantly higher highs. I thought that gold either this year is going to go, just completely exponential melt up mode, and then we crash harder, or because we have such a long bar count that at best we're just going to keep slowly grinding, and then maybe have a pullback, find lows again, right? Let these moving averages catch up a little bit, have a good chance to buy support. Target 1 is getting back to the highs, and then target 2 is as high as you want to go. We can measure this out, but I mean, a round number at 4,000 would be a pretty nice target on gold, and then some. I mean, if I don't know, I'm curious. Moving forward, the next couple of years, if gold is really seen as just an awesome asset, and we get a lot of appreciation on it, that's very possible. Okay, so that's gold. Silver pulled back a little bit. Spot price silver was 37.36, pulled back. Silver's down 1.39 on the day. Last couple days, silver has pulled back around 5%. I've got a diagonal spread that is going to be the sell call side is expiring today at 34. So I'm likely going to add another 30, 40, 60 day expiration right around this like 34 handle and see if I can get a bit of price appreciation. Plus, I believe it's a $15 call. Let me check this SLV position here. SLV SPY, looking at GLD. So what? Oh, silver, so SLB. There it is. Diagonal spread. So I've got a 15 by 34. 1389 is my debit. I've been chipping away at this debit for the last 60 to 90 days. It's up about $1,250, but it's not going to get called away at 34. So the plan is to sell another leg at the $34, $35 call, see if I can collect a bit more premium, lower my cost basis by maybe another 40, 50 cents, and grab that income side. Also, if price is up above that, then I kind of max out my profit. Meanwhile, I'm still holding shares. I don't have silver covered anymore, although I mean, it's kind of tempting to get it covered, but I don't know. I'm like, I kind of wanted to appreciate. I think silver has, 20, 30% plus upside going into levels that we haven't seen in a while. But just taking a big measured move. Let's go weekly chart here. I mean, realistically, my goal on silver is like, let's get to all-time highs. Let's see if silver can get to $48. So, even with a bit of a pullback here, I'd love some silver up about 47%. I mean, if I had a stock that I was pretty confident could go 47%, I'd probably take that trade. So I do like silver. We can still have pullbacks. There's still plenty of support in here. Something like this, plenty of support. Parallel channel, maybe there's room to the upside for this thing to continue to cooperate. But if we, pull back in the near term, I think there's some good, strong levels to be buying. Try to keep your stop loss out of the way. See if this makes higher highs and higher lows. Okay, so that's a little silver action. Bitcoin 105. A lot of indecision here at the tops on Bitcoin. Daily time frame, a lot of chop suey. Weekly chart, even more so. What's the next big hurdle for Bitcoin? Well, indecision at all-time highs. Does this spell some volatility brewing? Maybe. If this is going to break up, do we keep going to all-time highs? Does this break down first and backfill some of these runs we've seen with this trend line break and consolidation break? Let's go to the daily chart. So I've talked about maybe a backfill in here. If we have pullbacks, and this is just range highs, resistance highs, support lows, chance to scoop up a little bit more, if we are lucky and still liking bullish Bitcoin, scoop up a little bit more. Profit target would be the highs, and then maybe you run higher. So if again, dollar cost average wise, I think Bitcoin looks pretty promising. What else? MicroStrategy, got a bunch of covered calls. Coin, what a rip on coin. Was this a stablecoin thing? That had to be the stablecoin news, right? That was yesterday? What was this? That had to be Wednesday or Tuesday. Wednesday the 18th. Was this the stablecoin stuff? Passes the Genius Act, enabling non-banks to issue stablecoins. Got it. Yep, that was it. So big move from Coinbase. Got it. Ethereum still what looks to be a bull flag. Copper, I've got a level in here that I'm watching closely. German DAX. My fib, plot and fib from low to high, looking at a 30, 38, 50%. If we're that generous pullback wise, maybe looking to buy the dip. I mean, don't be terribly surprised to see either the 23 or the 30% retracement levels get up to the highs. That's typically a shallow move, and stocks do that quite a bit. FTSE, we just failed to break the all-time highs. Kind of the same situation. Are we going to pull back for a dip that investors are looking to buy? Pull back 23, 30, 38%, maybe. Right? Is that the dip that's going to be bought? Argentina, maybe back to the 200 moving average. China was down this week, the last 3-4 days. Brazil, chart alarm hasn't gone off. Latin America hasn't gone off. Mags, not breaking highs. Maybe a bit of a rollover into this like 51 to 48 zone. Watching the S&P as well. If Mags rolls over, S&P is probably going with it. Yeah. Apple 198, pretty quiet. Amazon 210. Broadcom just off the highs. Google, fine, 171. Meta, pausing a little bit near the highs. Meta's had enough volatility. Maybe this, maybe a wedge. Maybe, I don't know if it's going to pull back that much, but find this U.S.-China trade agreement gap. That would, I don't know, to be a pretty good spot to be looking. Okay, if we come down and test, higher lows, maybe that's Meta. Maybe it doesn't hit all-time highs anytime soon, but if there's a higher low, maybe that's a good entry. Something to watch. Microsoft up to some fresh highs. Netflix just off all-time highs. Nvidia still creeping up here. Tesla 320 still watching. My cover calls in this one 280 and 250, 750. And I'm going to continue to roll those. Berkshire Hathaway right at the 200 moving average. Bonds down. That means yields must be up a little bit. 4.42 on the 10-year. 4.94 on the 20-year. 4.93 on the 30-year. Gold, yeah, we talked about gold just a little bit ago. Let's have a look. Gold is here. So dollar index. I'd mentioned try not to be suckered into selling the dollar at these lows. I thought this would be a bit of a bear trap. Seems to be the case. So dollar to me is more of a buy trade, at least for, I don't know, if we have a pullback here on dollar, maybe the 101 handle. If we pull back to like 100, 101, maybe back to 102, and likely that's maybe going to be met with some more resistance. So I would think the resistance support continues to play out a little bit in the dollar. Oil still pretty volatile. Gold, like I said, just bouncing off the 21-day moving average. If it holds, I mean, I think this has the chance to test the highs if we hold the 21 and try to get back to the highs. If we break lower, we get in between the 21. Well, that opens up room to drop to the 50. We break below the 50, we have room to drop to the 100. This is still kind of my big target. If I get a correction where we do pull back to the 200, then I'm going to take some puts. I have a 270 put on GLD, a 265 put or 260 put on GLD. Put in a hedge as well, just in case it gets a little nasty to the downside if the market just rolls over aggressively. But we'll see. And then silver. So gold holding the 21, silver pulling back to the 21. We kind of had an outperformance run on silver where we went from 33 to 37. That was a pretty big pop on silver. So now any type of backfilling that we see, something like this, something like this, I'd like to see if we have a chance to buy some dips and still get into the 40s for profit. $48 on silver is my profit target. That would be retesting all-time highs. Okay, quick spot check here on a trade. All right, price is kind of testing lows again, down 20 bucks. Come on. 78, I got a 59.20. And I'm almost 60 points clear of this thing. Just upside down a little bit. Noisy, noisy, noisy day. Okay, what else? Gold, silver, dollar, oil, Bitcoin, Qs, SPY. You want to take a look at Dow? What's Dow and Russell doing? Dow's pulling back a little bit. I think this is still a good opportunity to be looking to buy some, or at least positioning for trades. I don't think the Dow necessarily comes back down below these options, or these April levels. So if we have the Dow, maybe this structure rolls over a little bit. This also might just be in a wedge. It might still wedge, but if it rolls over, we're breaking some fresh lows right now. SPX is breaking some fresh lows right now. Don't break too much. So fresh lows on the day. Coming back in, the week is now turned red. Is this going to run hard? I hope not. 5,900. Gosh, did we get there today? Guess I'll find out. So SPX trade. I might throw this on as a hedge. 5,900. This is going to be a put fly. This better be cheap. If I went 15 by, that's not bad. So for 30 to 40 cents, maybe. See if I get in here for 35 cents. We go 15 by 15. All right. I'm taking a little hedge trade on the day. In case we end up dropping down to like 5,900. It's just playing the gamma level. So down here, if we are going to roll below 6,000 and start pushing into this 5,900 zone, my goal is to take 35 cents, hopefully turn it into about $1 or better. And if it comes back and stays around 6,000, that's fine. It's just a 35-cent trade, but has pretty decent reward to risk. I mean, if I somehow get this thing spot on, then that trade can pay potentially, over $1,000. So high reward, low risk, kind of sprinkle it in the middle. So this will be more of a hedge fly. Let's group these together. What? There we go. Okay, so that's a bit of a hedge play in case prices get a little wild and crazy today. This one at 35 cents, I'm going to put in a close at around $1, maybe $1, maybe $1.50. Since I'm 15 wide, maybe get $1.50 on this one. All right, we'll see if price, finds some support here around this 59.20, 59.05. I'm telling you, just keep an eye on this 59.05. If price gives way, we break this little low from last Friday. That's around 59.62. If we break that low, I mean, especially today, it's like, do we break the low and just fall? Do we test the level and then bounce? I don't know. It is an OPEX. There's like $6 trillion nominal expiration today. I think like 3.7 trillion was just in the SPX alone. So it's kind of a crazy day potentially in the afternoon. Any thoughts on Swiss? Yeah, so we'll take a look at currency strength for the day. Swiss was one of the weaker currency pairs. Now it's the New Zealand. The New Zealand's one of the weakest, and Swiss is right back at the zero line. Dollar's been getting a bit of a bid all morning. Euro and pound slightly fading off these highs. Aussie yen at the lows. See what happens. Swiss pairs, I'm still looking. I mean, I like holding against the Swiss right now for positive swap. The Swiss instrument rate cut rates to 0%. So anything that I'm holding against the Swiss, including the Swiss yen, which I'm not trading the Swiss yen short, but if I'm holding Aussie Swiss long, CAD Swiss long, Euro Swiss long, Pound Swiss long, New Zealand Swiss long, Dollar Swiss long, we're still getting some decent swap in that one, anywhere from like 2 to 4%. Dollar Swiss, I believe, is still like 4.25, 4.5% of hold. So I'm just kind of patiently waiting to see if we get some bottoming formations. I do wonder if the gold trade has to go south, if gold turns a little bit bearish, or at least corrects back to the 200 moving average, if that turns the Swiss a little bit. COT, I do, but not a ton. Not a ton. COT is it's a lot of, I don't know. I mean, some traders love it. Some traders love, commitment to traders. I think it's good for a bit of contrarian. Like if you see that the retail side is very one-sided, um, especially when here's where COT is really good. Okay, let's say that the market has been trending higher, 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 and all you see in the COT report is that retail traders are still very, very bearish, right? If they're very bearish and this market's been trending higher, the COT to me is a contrarian play, which tells me that this market may still go higher to flush out and bring the pain into all those retail traders until they are stopped out. Then we start to see price reverse. So that's roughly how I would use it, is if we have a very crowded trade, one way or the other, and the market is going up and everyone's starting to position short and just like load in to a maybe a 70% plus bias. I think there's always that pain trade play, especially in currencies. So that's how you get flash crashes, right? You get a move like this where everyone is short. Let me delete this. So you go moves up, everyone's short, 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 and the market just goes up and then flushes them all out, and then it comes back in and reverses. And afterwards, they're like, "What the heck? I got the direction right, but I got stopped out." Well, yeah, because it was just a crowded trade. So I had to run, kind of flush everyone, make them feel the pain, and then when that liquidity is gone, and stops are all hunted, sweep the highs, whatever it is, then it reverses. All right, keep an eye on this today. All right, what else do we want to take a look at? Individual currencies. Take a look at individual currencies you want. Aussie, Swiss. This is a weekly. Let's go daily. I'll go here. Aussie, Swiss. So this is what I'm looking for some of the Swiss crosses. We have this low, we have this high. If this is a pullback, a chance to accumulate, I'd like to see if we can get back to this 200 moving average and maybe all of this support. So, 5,500, 5,550, 5,500 to 5,550 zone. It might take longer. I mean, honestly, this trade might still want to just grind lower, grind lower, grind lower, grind lower. Maybe it's a double bottom. We come back up to the highs, hold this move, and then we double that, right? Like that would be a measure move of maybe like the 58 to 5,900 zone. Big difference. Okay, are we going to breach these lows? We're at 59.68. Lows from last Friday, 59.62. Okay, this is kind of the make or break for the week. If we hold this low, okay, fine. If we break this low, look out below. It's a good quote, huh? You break this low, look out below. Keep an eye on it. It's not that far away. This is why I said the 5,900, 5,905 level is so key. It's right there. Like you can see it on the chart. There's like 30 to 40,000 contracts at 5,905. Pound New Zealand. Sure, we'll take a look at that one. Pound New Zealand. And let's have a quick peek here. I'm just going to check on a couple of trades that I've got running. So this one's now showing some profit. Oops. Okay, so I'm down 60 for my morning sesh. Looking to see if this one will actually hedge that out a little bit. Hopefully. Be close. Okay. So 59.62, really, really key level. See if it holds. Pound New Zealand. So Pound New Zealand, I looked at this. So we had our high, low. We are using this support level. I mean, I'm late to the trade, but that would have been my play. If this low holds, um, kind of a small like dollar cost averaging where it's like you can buy lows, maybe use the 200 moving average, trade one, trade two, stop loss lower. It's already made that 2-day pop. So, coming back up to the highs again, that's kind of all I would expect was holding this low, maybe hitting this midpoint, and we come back up into like 2.28 or so. There could be a little bit left to go if you want to look at scalping potentially on the smaller time frames. All right, what are the currency pairs? Anything stock wise, any symbols, any tickers, any charts? German 30. Um, Overbought with a little pullback. I mean, just to keep this really really simple. Um, if you, I mean, I do think the eurozone, as long as we have a stable U.S., I think the eurozone does pretty well. If you're buying small, this would be area one. Looking to get a little bit more of a dollar cost average position at the lower moving averages, so like the 144, the 200. So I mean, I would still plan on fresh highs for uh, the DAX, and yeah, I mean, I'd still plan on that. So either shallow pullback, small trade, pull back a little bit more, dollar cost averaging a little bit more. And from there, I mean, if it hits highs from here, that's a fine trade for a little scalp to the upside. And if it is going to pull back lower, scalp it up to the highs again, to me that's a pretty good looking trade. Let the trend run. All right. 64 key level here at 59.62. That is last Friday's low. We're about to see. Maybe there's a little bounce off of 59.50, but there's not much. I'm seeing this level of 5,900 light up for the morning. I was kind of hoping that this would be a little bit larger. So it was decent at 59.55. Wow. So this 5,900 handle is lightened up a little bit. Okay, let's see if 59.50 is going to be a support level. Otherwise, this is going to test my put side just a little bit. That butterfly spread that I have will help me kind of mitigate some of the risk. So, maybe I'm down $100 here, but I'm up $100 on my butterfly. I can wash it and survive. Let's go Eli Lilly. That was the request. So here, Eli Lilly pulling back. I don't mind this one. I tried to price out a trade last week on Eli Lilly. I just thought, man, if we get back to these lows, like these lows right here, I wouldn't mind looking to see, okay, we're revisiting April lows, going out of the money, maybe just a simple credit spread, maybe a ratio spread. It's just a really expensive stock. I mean, it's $760 right now. Does it fall much lower than 720? I don't know, maybe 700. But that's, I mean, I think I mean, fundamentally, we're talking like $1,200, $1,300 fair market value based on discounted cash flow model. Um, I think as long as people are still taking Ozempic, Eli Lilly is going to do fine, which is probably a big thing. Okay, CVX and Hood. CVX to be Chevron. So to me, this was a trade. You're buying support. I like the lows on Chevron and trying to get back up into range highs. So if you're, buying the 145 handle, it's trading at the 148, 149 right now, but price target at like 175 to 180, somewhere there. And we go a little bit higher. What else? Euro dollar Hood. Robinhood at 76.33. I do have I think a ratio spread all the way down here into the 40s. Let me double check that really quickly. So 37 by 35 ratio spread. And I mean, that's one way I'm just taking advantage of. It's like, I'm not going to chase this thing. I'm not buying this thing at the highs. If it goes higher, awesome. I'll just make income on the ratio spread. But what a run, you know? So for me, it's trying to get, some, if we're going to own the shares, it's like own it as cheap as possible. Own it down here with a nice gap fill, own it down here at the big dynamic support levels. This is why I don't chase highs. This is why I trade options. It's like I can still make income on the trade. This would pay me about $200. So $200 with a max profit of around $400, almost $500, if it's somewhere between 37 and 35 by the end of expiration. But if it just goes higher, it's $200 winner. Okay. All right. Oracle, ORCL. I mean, I think after this huge pop post earnings, again, maybe just a volatility. I mean, honestly, I think this better trade is we rip up here, you sell volatility, maybe an iron condor. And I'm not sure what the width is, but if it was, 15, 20 delta on the call side, 15, 20 delta on the put side, see if price just stalls essentially after earnings, or just wait for a pullback. I mean, if this goes pull back into these areas here, pull back, pull back, pull back, and then back to the highs, I mean, that'd be a great spot to consider participating since it blew through these recent highs. So, yeah, I mean, if you're wanting to chase, it's like don't chase the highs. Pull back to 190, maybe gap fill at 180, and look at a bull put spread, bull call spread, something like that. Pretty simple. Just be patient. I think don't chase the highs. IAG and Lululemon. Lululemon continues to get smoked. I've got a pretty low ratio spread on Lululemon right here. 160 by 155. It's still down a little bit, about $250. Max profit's about $200 on the credit side. I do have a $5 wide ratio spread, so potentially, if we went all the way down to like 155, 156, I could get a bonus trap of maybe $5 and take that in, and also have the $2 credit. So most likely the profit trade is going to be about $2, but that potential keep of maybe $6 or $7. Okay, again, flirting with the low, flirting with that Friday low at 59.62. Chart alarm's going off right now. So the question is, are we going to just tag that chart alarm and go anywhere, or are we going to just tag the chart alarm and bounce? So we tagging to go further, we tagging to bounce. It's next on the to do to watch. Boston Lululemon. Okay, I mean that's fine. I wouldn't be super stoked unless you're. I mean, again, this is maybe a stock for dollar cost averaging purposes. How low can it go? I don't know. I mean, we're at 227. Could we drop down to 200? Could we drop down to 160? Why did I do the ratio spread that I did? Because it would be pretty much the COVID lows. The COVID lows. That is my ratio spread. So 160 by 155, and the COVID lows is one. Oh, I guess I'm a little higher than that. 128, 160. So I'd own the shares around 148. 148. Lows. The COVID lows are 130. It's not too far off considering the stock would be down just a ton. If I'm assigned on this stock in any way, shape, or form, break even is 145, and the stock would be down 72%. I mean, I'd like to take some ownership of something at 72% if I believe the company fundamentally is strong enough, and I think it is. I think that it is. There. I mean, Snowflake wise, pretty good. Rose, good earnings. Not terribly expensive price to earnings. Fair value. Nearly $300. So yeah, I mean, it does have potential. It's not super expensive compared to other retailers. So just be aware. A lot of stuff can happen. But the trade that I put on as this was falling was a ratio spread. Stay out of the way. Okay. A couple of ones here. So Lululemon, yes. Ozempic. I was just talking about Eli Lilly. IAG. I haven't seen that one. IAG. $7.31. I am Gold Corp. I don't even know what this one is. What are you trying to accomplish here on IAG? What is this? Development, production, gold, mineral resource, properties, owns and operates. Is this a miner? Owns and operates Westwood Mine in Quebec. Development project located in Ontario. Operates. Yeah, I don't really like I don't like miners as far as like silver miners, gold miners, senior, junior miners. Um, I mean, I think that the best trade of this year would have been the catch-up trade on GDX. Gold, like GLD and spot gold were ripping to the upside, and this was still way, way, way behind. And all of a sudden, we just had this monster catch-up trade. So GDX up 64%, and just played along nicely with the trend. So from lows at 26, pull back into the same area. From really 37 to 52, $53. It's a pretty good run. Oh, you're talking IAG International Consolidated Airlines. Oh, well, I stand corrected. There it is. Well, that's different. And this is a stock that trades for $4. Eh, I don't know. Is it liquid? Is this a UK stock? Looks like it. Airlines are tough. I unfortunately have shares of JetBlue. They have not been good. I was thinking the JetBlue Spirit merger was going to happen at some point, give that thing a squeeze. It never happened. I'm sitting on just crap shares there. Delta was up a ton last year. SkyWest was up a ton last year. They all fell aggressively. That was with, I don't remember if that was like a Boeing debacle or when Trump got a plane from Qatar. I don't remember why the stocks fell so hard. Or it was all the FAA things that were happening. I really don't remember. They dropped like 40, 50% very quickly. Come on. But anyway, I personally, I'm steering clear of airline stuff. I mean, it's cheap. It's only $4. Does it go anywhere? Maybe. I mean, if I had a chart alarm here at like maybe $2, $1.50, maybe. Right? Not, I don't know, not something I want to chase. Any chance Uh, Glenn, you binged it? Nice, man. Big shout out for Glenn for picking up little practical options. There you go. Very nice. Ken saying, any chance the price for the Euro Aussie become bearish? Let's take a look. Euro Aussie. I wouldn't get if you're thinking bigger time frames, I would just look at something like that. I mean, with this high, I mean, what did this thing do? We rip up, we pause, we rip up, we pull all the way back. I mean, it just seems like a slow, steady move up. Where if you're looking at current price, you're following current alignments. The trade, in my opinion, on Euro Aussie would be you're buying low. As long as we don't take out this trend line, then we're possibly coming back into. I mean, there is some structure here, but if we breach this high, I mean, this market can drift up into like 1.80. So like I said, as long as we don't break this trend line, I think this has potential to keep creeping higher. 1.80, maybe a little bit more, but there's a lot of structure there. So shorter time frame alignments. I mean, daily to me looks like it's up. We've been up since the bottom in April here, April May. But if we go, higher lows, higher highs, maybe get up into the 1.80 level. So it's about 100 and what 85 pips higher. Yep. So I don't see super bearish yet. If I was looking to get bearish in this, Ken, it'd probably have to be up here. If I'm going to get bearish, it'd have to be up here. Okay. Or like, I mean, I showed the trend line. Like it has to just kind of clearly break that trend line, which I wouldn't force that trade. If I'm looking to sell it, I want some shorter term confirmation. Maybe even wait for just bigger resistance. Okay. Quick spot check on the day. Is my daily profit play doing a little bit better? Maybe it's back to break even or so. Okay. Son of a biscuit, man. Down $60. Let's go. Come on. So either, I mean, I'm still 45 cents off of this level from a threat, but I'm still down $60 on the trade. I'd like to see one of these pay. Either this trade pays, this one would take a small loss, so I still net positive on the day. Maybe I take, I don't know. I'm not ready to close this one yet. So if I keep this one open for at least a break even or better, this one might be a small loss. If this one pays me, I could take a manageable loss. This one would hedge it out, try to go, flat in the day without taking too big of a whack. So I'm going to go ahead and set a chart alarm at 59:20 just in case. And again, as I mentioned, like that 59.62 handle right here, it's like the low is being tested. We did just squeak out a fresh low of the week. We are taking out low from last week. I mean, unless that is a poke and the market's going to come back and hold it like that 6,000 handle, that would just kind of be the calm before the storm as this market potentially rolls over on itself. But we just have to meet, we have to break the lows. So I'm not saying that I want it to. I'm saying that technically it makes sense that we do break the lows. We do have a little bit of a slide, but unfortunately, the market's not going to be, it's not going to be good when the market falls because it's going to increase volatility a lot. We've watched the SPY, or not the SPY, the VIX. We've watched the VIX, get back into the 20s. I mean, this is a pretty elevated volatility. Most of the time we've seen the VIX, I mean, in these like bull markets, we've seen the VIX in like the teens, like 13, 14, 15. So a 20 VIX can kind of quickly become like a 25 VIX, and that does scare. That does scare a lot because that's way bigger movements. Maybe intraday. Markets caught off guard a lot of times if we're going to have a big jump up in volatility. So just something to be mindful of as we come into the next couple trading days, and then on Monday the 30th is going to be end of month and a quarter. All right. So that being said, I just got a couple things to monitor on my end. Got some scans I want to take out in price. I got some expirations I need to tend to. But for Friday, I'll take Andreas's final request here. LMT. Let's have a look. Lockheed Martin. I mean, outside of the trade being super expensive, I don't think it's a bad trade. I would just want to have a stop loss, kind of below these recent lows. So is it going to go break into this level, work its way up? Maybe. This is more like in the defense space. If you're kind of pro risk off, maybe pro geopolitical escalated tensions, then Lockheed should be okay. It's just an expensive stock, dollar cost average maybe, but not a super favorite of mine. Let's go LMT here. And I mean, again, snowflake wise, checks a lot of boxes. Not terribly expensive. 20 times price to earnings. Fair value 628. I mean, look at some of these are like household defensive plays, right? Lockheed Martin, Northrop, and General Dynamics. Like price to earnings are all pretty similar on each one. I mean, technically it looks okay. I just want to have stop losses. If I was buying it, buy here and maybe buy here. I wouldn't give the market too much more room than that. If it goes higher, great. It's upside. Would I hold it to all-time highs? Not really. I would just, I don't know, maybe if this is a range trade, measure the box and get up to, 1-to-1, something along those lines. Okay. All right. Couple more things here. Still down on DPP. That's annoying. That really, like, how's that? Yeah, I guess we are 20 points off center-ish, so I get it. Fine. Okay. That'll do it for today. Happy Friday. Have a good rest of the day. And let's come back and do it next week. All right. Thanks, everybody. Bye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.